part of that organization. And Hello Apartments is, if you go downtown north of Cummings Street between 12th and 13th, there's a huge new white apartment building called Hello Apartments that was completed construction last year, 171 unit apartment building, 1 to 3 bedrooms. And so maybe, is there a way to scroll? Yes. So Hello Apartments, starting today, is offering housing rental subsidies for employees of nonprofit organizations like yourself. So we thought, what better place to roll out and share the news than through
And usually I do get a discount on accessories.
Oh, sorry. And so I just want to describe a little bit how it works. I'll answer a few questions. I will be honest that I'm mostly useless on information. So Bluestone is our property management at Hello Apartments, and their phone number and contact information, website, and everything is on this flyer, which we'll make sure that this gets sent out as part of the meeting notes. And so in order to qualify for a rental subsidy, it's pretty easy. Number one on this yellow banner on the right, which you can't see, but I'll just walk you through it, is you have to be employed by a 501c3. Number two is there is a measure of income called area median income. And here's where we get a little bit technical. And I'll just say that your best bet is to guide anybody who is thinking about applying to the leasing office at Hello. But area median income, for anyone who's not aware, is a measure that's set by HUD. And so we're going by the 2022 guidelines for, it's measured by, number of people. I'll just say for one person, that would be approximately annual income of 40,000 to 53,000. So just to try to give people an idea of if they might fit into this category. And then the third requirement is just kind of the normal leasing process at Hello, criminal screening and applications and those types of things. And so what we hope to do is really just increase offerings. Our apartment units run, I'll say, in the range of 1,000 to 2,000 a month, depending on number of bedrooms. Obviously, we have the most 1 bedrooms available at this time, and those are on the lower end of that range. But we know that can be a stretch for people. We value a lot our nonprofit community. And so it's going to be on a first come, first serve basis. This is kind of our announcement, and we expect that the spots may go fast, but really the instructions are just, if you think that you fit into this category or you're not sure, feel free to call the leasing office on this number, and we would love to see if any employees of your great organizations would qualify for some rent relief in Hello Apartments.
Thanks, Courtney.
Yeah.
I've never heard of a program like this, so I think this is pretty innovative, and especially one way to help support nonprofit employees. Any questions?
I will say it's a pilot, and so we have committed funding for 3 years. I just want to be upfront that because it's innovative, we're trying it out. So for sure, it's a 3-year pilot, which is I just don't want anybody to think that it lasts forever, because hopefully it will, but we don't know.
Well, with this crowd, Courtney, we're all used to grant-funded programs that may change from year to year. So I think that makes sense. So if you have any questions, the phone number, we will email out, or actually, I think Aaron, he's good. He just dropped it in the chat, the flyer that you can look at, share with some of your employees. And they're very happy looking apartments. I drive by them every day, and they have these really fun yellow balconies. So there we are with that.
And if Courtney, you haven't been inside, there's a lot of like cheeky sayings, and it's really meant to be uplifting and welcoming. So.
And it is not grant supported. This is just something that the owners of the development, wanted to try out, something different. So, Courtney, you're welcome to stick around or get on with your day since it's beautiful and the sun is shining. But thank you for for sharing this fun, innovative information.
All right. Thank everybody so much. Have a good day.
Thanks. So now we're going to turn over to our colleagues and friends at FNIC, Jim Garbina and Corey Dickmeyer. We invited them to come today. For those of you that are regulars on this call and or the Human Resources monthly call as well, you know that health insurance comes up a lot. How can we find it, make it affordable, especially if you're small, don't have a lot of options. And so I said, well, why don't we just invite the experts? And so with that, I think we're going to turn the conversation over to Jim and Corey. You know, they brought some information to share. I don't know if you have anything to share on your screen.
Yes. Yep. I'll
Yep,
share
you
the
do.
slide now.
Perfect. And then just drop any questions in the chat.
Everybody see that okay? Okay, great.
All right. Fantastic. We're going to kind of breeze through this relatively quickly, honestly. With the health market, I think Ian said it best. Affordability is always the toughest discussion that we have with everyone, and certainly with budgets in many cases not growing and healthcare expenses growing, the whole industry is trying to come up with some solutions on what's working best. There's been a few recent national articles about it. I'm not going to take time today, but we did put together some slides. Wanted to give an update on the NAM benefit connection, but some other thoughts that can enter into your thought process as you look at whether you're offering benefits today or looking to add benefits in the future. We created the NAM benefit connection back in 2003. We have a lot of the NAM members that are still in it today. So I think that tells a lot about the stability of the program. Now, Andy or Corey, if we go to the next page, really the top things that we want to touch on in the presentation today is what are the trends? So we want you to know what to expect. What options are there for employers to consider? A little bit on the benefit connection itself. And then what's new to the marketplace that you may want to know about as you pursue that this year. When we talk about trends in the marketplace, the first discussion always has to do with what is healthcare trends, meaning what is the inflation expected to be for this year, and what does that then translate into rate renewals. In most cases, healthcare trend follows the general inflation. So when we look at what's going on with cost, there's still going to be a healthcare adjustment that's probably larger than maybe what you've seen due to a lot with the wage inflation. It's the first year in history that the hospitals asked for double-digit increases. In most cases, the insurance companies pushed back, and they did again this year, but in many years, there's what we call a 1 or 2% increase in the unit cost. So just say a day in the hospital. But then the other side of healthcare trend is how much do you and I consume this year versus last year? And that consumption as we're getting older is going up. So what we're faced with is probably around, on a national level, around a 7% inflationary increase. To some of you, that may not sound that bad. We've seen increases in the market anywhere upwards of even 200% in 1 year. That's rare, but it can happen depending on some of the programs that are out there, as well as some of the health conditions that are out there. The second area that is driving healthcare inflation is prescription drugs. And most of you know this. You know, we watch the commercials on TV, but we're really not aware of how expensive those drugs are. And just to give you an example, there was 3,500 new drugs introduced last year, all of which are $100,000 a year or more. So when we think about that, one person with a drug of 100,000 is roughly the cost of 10 people's premium for the year. And so that is what one drug can do. Now, in many cases, these drugs are very successful. They help us work, they help us get through life, but the industry is struggling. There's been a lot of pressure on Congress to step in and do something with the drugs. They are addressing that. There's been some new transparency rules. Those of you that are in the larger market and seeing that, you're having to submit your pharmacy data to the federal government in order to clear up some of this transparency. So we do anticipate things coming down the road in a couple of years. Last year, they introduced hospital cost transparency. So all the major hospitals are having to post in a machine readable file every line item of their expenses that you might undertake. So all the services that you might get from a hospital. We think that transparency will do a lot to control cost. What transparency doesn't do, though, it does not help us become healthier. And that is one of the issues we're faced with. During COVID, a lot of us delayed our care. The doctor's offices weren't open. We delayed that care. So 2021 was really the worst year in our history from all the health insurance companies. Unfortunately, 22 was equally as bad. It went up only about 5%, but it was 5% higher than the worst year ever. But 23, there are some reductions to COVID that we're anticipating. And I'm going to have Corey make a few mentions here just as we go through this list.
Yeah, so one of the things ending on May 11, 2023, with the COVID-19 emergency, President Biden released that information saying that the emergency as we've known it will end in terms of some of the benefits that were required or mandated of the insurance carriers. One thing we're keeping a very close eye on is the cost of the vaccines. The cost of the vaccine, what we're hearing, will be priced around $130 as opposed to $12 as we've seen thus far, or in some cases free. The other thing that many of our carriers are sharing with us is that the testing, the cost of testing will continue to be covered on an in-network basis, but on an in-network basis only. And so out-of-network providers for testing services would not be covered under the healthcare plan. So some of those changes are imminent as we get closer to May 11th there.
And we do have some flyers on that we can give to you in post. Why we think that's important is employees have not had out-of-pocket expenses for this in the last couple of years. Now they'll start to see some of the out-of-pocket expenses as they remove the emergency status.
Also, Jim talked, of course, about wage inflation and some of those other concerns and issues that employers are dealing with out there. In addition to that, or what makes that employee attraction and retention even harder, not in addition to those inflationary costs, but other things coming out of COVID. Obviously, there was a popularity or a shift to remote work, and so we continue to see in our industry, especially, we continue to see employees that want to stay home or work, have more of a hybrid or work from home schedule. And so those discussions continue to happen out there. We have seen more of a shift in the larger employer space of employees coming back into the workforce. But what goes kind of hand in hand with that as it pertains to employee benefits is how do we attract and retain the best talent? And one of the things we've seen over the last couple of years within our block of business is more of an emphasis on voluntary or employee paid benefits. Traditionally in that space, there's a couple of carrier markets, the Aflacs of the world, the Colonials of the world that offer those worksite benefits, including life insurance and critical illness, hospital indemnity, short-term disability, and other benefits, accident type benefits, to really round out the benefit package for those employers. But we've also seen sort of your traditional true group carriers as well expand into those benefits. And so our employers are certainly asking for that as a way to keep their costs down, but continue to round out the employee benefit packages that they're offering to their staff. Some other options for employers to consider for small employers, and this may seem obvious to many of you, but we wanted to just point out simply that for those of you with fewer than 50 employees, there really is no requirement under the law to offer health insurance. And so for some, it may be a viable option to simply not offer healthcare coverage. Of course, those with 50 and above employees do have that legal requirement to offer the healthcare or potentially face penalties for not offering that healthcare. In the small group space, again, those employers with fewer than 50 employees, the Affordable Care Act small group plans are an option. These are essentially guaranteed issue products, meaning that as long as those small groups are meeting very basic underwriting and participation requirements, the carriers are required to offer a product to those groups, assuming they're paying their premiums and meeting those basic obligations under the plan.
A couple of things there. We've seen the ACA small group plans taking some pretty big adjustments. And I know with that, employers have raised their deductibles and co-insurance. There has been, though, a little bit of a trade-off in the expansion of preventive care. So each year there's a national task force that looks at preventive care services. They've been expanding all those coverages, and those are at no cost. Even if you have a high deductible plan, the member does not have a cost for those preventive services. So there are some trade-offs, but we know pricing has been very difficult there. And we do make then some suggestions to look at ways to reduce that pricing. One of those is what we call high performance networks or narrow networks. There's two primary ones in the marketplace. You have CHI, and then you have Nebraska Health Group. And Nebraska Health is the Methodist University side of that. And in those cases, you can get 9 or 10% reduction off the full network price when you're offering that. Now, that's not offered in every market, but it's worth asking for. We see really pretty good enrollment. Employees will elect about 40% of the time in that option, if given that option, because it drops their premium from the beginning. Corey, do you want to go through level funding a little bit?
Yeah, so level funding is a concept of self-insurance. It is a self-funded health plan in which the employer contributes a known monthly cost or a known monthly premium to the cost to cover things for such as administration, claims, and stop loss insurance protection. It's generally tailored to the smaller organizations. We have seen level funding go up to as high as, I believe, 300 lives with some carriers, up to 100 lives with other carriers. but it allows that smaller organization to sort of dip their toe in the water when it comes to self-insuring without the downside risk, because it is capped, and you do pay that known premium up front. So the cost in essence is capped month to month. The risk being renewal risk at the end of the year, with the upside of potentially receiving dollars back at the end of the year for good claims experience. So in a year where you run well, employers will receive some of those dollars back at the end of the year. And again, that's been a concept that has grown in popularity, and Jim will talk in a slide here or two about the Nonprofit Association of the Midlands program, which does involve or incorporate level funding as well. Lastly, I would touch on the stipend here. We do oftentimes address questions from members of the Nonprofit Association that will come to us, and maybe they're starting with one executive or one employee that have questions about how to just get started with regards to offering benefits out there. And so there's not a ton that we can offer, but one of those discussion points comes down to stipends, which would be an after-tax or payroll subsidy, essentially, for those executives that are looking to pay for healthcare on an individual basis. There has been a newer concept that was started in 2020 called ICHRA, or an individual coverage health reimbursement arrangement. These ICHRAs have grown in popularity, especially in states where the individual market is strong. Nebraska, unfortunately, has not been historically one of those states. We have seen a couple of new insurance carriers enter the market here in the last year, including Blue Cross Blue Shield coming back into the individual market. But ICHRAs offer the opportunity for an organization to, on a pre-tax or a tax advantage basis, cover the cost of their employee going out into the individual market, purchasing their own coverage, and providing a reimbursement under that HRA, that health reimbursement arrangement.
Yeah, it's probably the most flexible program. And one of the things employers will do that for is because they can set their budget a little bit easier on what the cost is, rather than just saying, well, what's my premium going to be? You can be an active participant in what you're setting that budget for the employees. It is a good option. It's flexible. Some employers don't love the idea of saying, hey, we're just going to give you money, go buy your own insurance. But it is one of the options that's available out there. When we talk about the NAM benefit connection, a couple of things that are really important. And if you've been buying health insurance at any level, small group, large group, individual, one of the things you know is it's very hard to predict what your renewals are going to be, right? It could be good one year and next year they can blow you out of the water. And I think we've all seen that in terms of those opportunities. Level funding, well, let me start. First of all, fully insured is generally the most predictable, but you really don't know where your renewals are coming until, 45 days till that date. So it's hard to budget. And we know budget is very important for the nonprofit as well as everybody, but very important to the nonprofits. It is a pooled product, so meaning all of the nonprofits are pooled together for the benefit of every organization. I would tell you our stability has been tremendous. We've kept low single-digit increases in place for a long time. If you're in the level funded side, about 25% of the employers are getting a refund of some of those premiums if they're having good claims experience. So it's one way that we reward you. we go down to 5 or more enrolled employees. So that's our minimum today. We do have level funding and self-insured options. So some of the nonprofits are in a traditional self-insured program, but we still pool everybody together to gain that size and leverage in the marketplace. And it really expands to all the products. We have medical, dental, vision, life, disability, vision. We offer HRAs, HSAs, FSAs. We do have an electronic enrollment system. One of the things that businesses are looking for efficiencies and how they serve their workforce. If your workforce is not centralized, in many cases now working from home, that electronic system can be a great solution to doing adds and deletes and changes. It's one file feed to the carrier, so you don't have to go in 5 times and enter that information. We've been doing that for a long time. We manage it for you. It's a great, I think, additional benefit that you can consider. A couple of the other comments I want to make about it is we did make a change from Aetna to Blue Cross in 2022. So we ended our first year with Blue Cross. Our renewal was about 6.5% on the level funded plan. We know that beat the marketplace in a lot of ways. This is just a quick snapshot here. We have tons of information that we can share with you, but today was kind of a high level. So if we go on to the next page, one of the things that I think is important is that 4th bullet point, ACA tracking and reporting. Corey and I have a client that is a nonprofit this year. They made some mistakes in that tracking and reporting, and they're facing a $200,000 penalty from the IRS because of the mistakes they made. So it's very important that whoever you're working with helps you through that, make sure you understand it. Again, that's mostly involving employers over 51 employees, but it is something not to overlook. So we'll help with that compliance, HR management, employee communication pieces from enrollment guides to annual benefit guides. We can help build those out for your organization. So as you have new employees coming on board, it's a pretty simple way to say, hey, here's all the benefits that we can offer to you. The next slide, I do want to mention, and I'm going to have Corey talk about it a little bit, but we've brought NICE Healthcare to the marketplace. Ann and I had a little bit of a discussion on NICE. We're trying to see if we can do this on an association basis, but I felt it was important to inform you. It's kind of a new version of primary care insurance, and it can be delivered both in person as well as virtual care. And it's one of those things that even if you're below 50 lives and maybe your budget does not allow for traditional healthcare, it would be a way for you to provide a basic primary care service, including some mental health, at a relatively cheap price point. It's around $39 a month per employee. The nice thing is, I didn't mean to use that pun, but the great thing is that cost then includes everybody in your family. So it's the same rate for one person as it is for a family of 5. Corey, why don't you add a little bit to that?
Yeah, just adding to that, coming out of the pandemic, there was an uptick in the popularity of telehealth medicine, and as Jim mentioned, NICE brings kind of a hybrid of both telemed via the use of our smartphone technology. We use these for everything anymore, but also the ability to see a doctor in the comfort of your own home. So they will actually send providers under this membership service out to your home if necessary to run tests, including EKGs or X-rays, just from the comfort of your own home. There's a panel of different medications that are covered at 100% under that membership fee, up to 550 different medications that are under that formulary list that they offer. A panel of over 60,000 physicians or nurse practitioners that can come out and see you and provide that on-site care, or through simple chats and telehealth services with our smartphones. So it's a really great way for the organizations to be able to bring primary care back to the forefront. Whether you offer a high deductible HSA style of plan or a traditional healthcare plan product, primary care is something that's been kind of lost a little bit in the mix of the ever-growing costs of healthcare. And so NICE has come in and really been kind of one of those disruptor type companies that has brought a new idea and platform to the table. Their net promoter score, if you're familiar with that term, is extremely high for the healthcare industry. I want to say is 96, which anything above 30 is usually generally pretty good when it comes to healthcare. And so they're very popular once their word gets out. And so we think they're going to be one of those companies that comes and disrupts the healthcare space a little bit by bringing affordable healthcare to the individuals.
Yeah, and as I mentioned, we know with the ACA marketplace, those out of pockets now have exceeded 8,000 for single and 17,000 for a family. So as you have raised your deductibles and out of pockets on your plan to help with the premiums, this might be a consideration to fall below. So it does not meet healthcare requirements as such, but it would be a nice thought. We're also working on a product for the association where you can offer individual dental and vision without waiting periods to your employees. So we'll have more to share on that, but it is a concept. Again, even though you may not be in a position to make it a benefit, you can offer it through your organization to your employees to pick up those coverages. And with that, I think we wrapping it up just from a time perspective, but why don't I turn it back to you, Ann? If there's any questions, we can respond to those either after the meeting today or depending on how timing allows.
Yeah, I guess a comment and then a question that was in the chat. So do I recall correctly, Jim, that with NICE, even though NAM, we have 5 employees, we're all on Blue Cross Blue Shield. If we wanted to add NICE on top of that Blue Cross might give us a discount on our traditional health insurance?
Yes, and in turn, when you add NICE, there can be a subsidy from Blue Cross and as well as some other carriers, but that can be about half the cost of NICE could be provided through the subsidy. So we're
I
working
think that's
on that for all of you.
Yeah, I think that's a nice way, especially those of us that have a high deductible that, that would complement, and then you could still get that primary care. I see James asked in there, they have 3 full-time and 3 part-time employees, and they're trying to figure out how they can get health insurance to everyone with an affordable premium. Well, I can't promise you the affordable premium because that's, everything we've heard today. I do know, either talk to your own insurance broker, or if you don't have one or looking for somebody that really understands it, email Corey and ask him and say, this is, he's going to need some information, like tell us about your staff, how many employees, age, smoking or not, all those fun census questions, and then can let you know, here are some options. I think we got a high level view at some of the options today that they went through, everything from the healthcare stipends to high deductibles. You know, in the issue of transparency, NAM does all of our benefits through FNIC. Well, actually all of our insurance through FNIC, always have. And then Juliet put a question in there, if I can get to it, that the Bar Association offers a pooled plan for small firms. Can you help us understand how that could or could not work for nonprofits?
That would be the similar as the NAM program. It's a pooled program, but it's just for the law firms in the state of Nebraska. Now, if you're a law firm and a nonprofit, I don't know, I think there's maybe one or two legal entities that might be able to qualify for that. They've actually done a decent job. It hasn't grown that big, but I think it's gone through 2 renewals now and done okay. Some of these quote consortiums or associations have come and gone pretty quickly. So it's hard to maintain that stability. And that's one of the reasons I brought up NAM. It's not always going to be the least expensive thing, but it will be when you start measuring over 2 and 3 year timeframes. It will always be the lowest cost. We've shown some of the nonprofits where over a 3 year time frame, they've saved $1 million. Now, these are some of the larger nonprofits, but we've been able to demonstrate to them $1 million savings. And that's hard to do in this market. But we have really good standing with Blues. The transition from Aetna to Blues went well. We're expecting another 20-year relationship with Blue Cross, and the program continues to move forward.
And then the caveat is you must have at least 5 employees. So unfortunately, if you have less than 5, that's not going to be an option for folks.
Right. There is some discussion, and we'll let you know if we can go below that, but there's some state limitations that we deal with.
Did I understand that that's level funded though, as opposed to a fully insured plan?
It is, but level funding, for practical purposes, you're paying in the maximum cost, so it works like fully insured. The difference is, though, if you have a good loss ratio, so let's say that your group has decent claims, you'll get 2/3 of that excess returned to you in the following year. So at the end of the year, we do the calculations. We return those dollars in April. Last year, we returned nearly $1 million to all the groups in refunds. So that's a big opportunity. I think we'd be happy to go in depth what that concept looks like. The one difference or comparison that I'd make is virtually all the insurance companies offer it. So you could go to United Healthcare, you could go to Blue Cross, or you could go to Aetna today and get that product. The difference is the amount of the refund is quite a bit higher in our NAM program. Secondly, we pool all the renewals. So even if you have a bad year, last year we had some groups that had 200 or 300% loss ratios. They got the same 6.5% rate increase that the others did. So we were able to give everybody that one for all for one concept. And we've done that since 2003.
So also in the chat, Christy's asking, is this then kind of like a shared savings program?
Yeah, that would be a great way to say that.
And I'm sorry, I know you talked about savings for employers. I think that's obviously, as nonprofits, part of our fiscal responsibility. But I think a lot of us also are really wanting to ensure that our teams have the access to the care that they need, and that's crucial for employee recruitment and retention as well. So maybe this is like a call to have offline. I just know a lot of us are interested in with that plan, do our employees have a full panoply of healthcare
Yeah, they
that they're
can
able to take
choose
advantage
the
of.
full network of Blue Cross, which is all the hospitals and 99% of all the doctors, or they can choose one of the narrow network options where there's reduced premiums for those options. We've got lots of referrals and references that we can provide to you.
And
but
in the menu of plans also, kind of the spectrum of plans goes from about $1,000 deductible up to $5,000 or $6,000 deductibles with kind of your traditional PPO plans, as well as a panel of about 4 or 5 different HSA style plans. So across that menu of plans, we offer those benefits that meet all of those regulations under the law.
And we can allow you to offer more than one plan, so employees can have choice.
Good questions.
Another one came in the chat. Let's see. Oh,
Yeah, that was just a thanks.
okay.
So we'll be sharing this recording with the listserv. Jim or Corey, can we share the PowerPoint as well if you send it over our way? Would that be
Yes.
okay?
Yeah.
So we'll send out both items. And I would say if there's any more questions, I'm going to give it a count of 5, and otherwise we'll thank our friends from FNIC and move on to our other topics. Great. You're welcome to stick around. We just have a few more things to cover. But we appreciate you coming and sharing your expertise.